Hello dear traders, petar.jacimovic here from vicanalysis.com. I want to post the update on my new position I established. This is a more like intraday position on the Australian dollar, US dollar. I found an interesting volume reaction and price action here, so I did put sell order near the 0.745 level, and my risk is around 25 to 30 pips. I'm going to try to take like 70-90 pips on this particular setup, but again this is more like intraday, since I will look to for sure close or secure position in the next 20 hours, because we have a indecision interest rate decision later on Australian dollar, so in approx about 1 day. So I established here selling positions. Why? I took actually one sell position here, 0.5%, so 0.5% risk from account, which is my classical risk here. And as you see here, stop loss is above this climatic bar here, so about 25 to 30 pips, and then going for 70-80 pips. The reason why I entered here is we got a massive buying climax on intraday. I must say this is a strong buying climax of 35 pips in 5 minutes. On Australian dollar, that's a pretty much climatic action, since the Australian dollar is very slow currency pair, and 35 pips in 5 minutes is a climatic action for sure on this currency. So as you can see, the volume spike here, the buying climax on the tick volume as well, and the spread is ultra wide, so this is for sure buying climax. What we saw here is the automatic rally to this stage here, and then price went upward, test this climatic zone area. It tested the very successfully, because we got also the up thrust there, and it's a first sign that sellers started to establish positions here. So sellers came in around this stage here. They started to sell around this stage here. We went lower, then some demand again came in, but it's still, as you see, demand is still on the market, but it's very weak compared to this volume spike. So many of the professional many of buyers here exit here, so, and then professionals start to sell because they scale out. So professionals maybe bought at this stage here, or the crowd bought, whatever they happened, and the professionals scaled out, and right now they're establishing selling positions for potential another scale out on the lower price. So what we may expect, since we have a successful test of this buying climax, price is right now going sideways, but again in 5 minutes 35 pips, and with this ultra volume spike here, and also on the this is the futures market, Australian dollar, US dollar instrument. So this is about approx 7.5 thousand, so 7.5k contracts in the 5 minutes bar, so it's a very big, almost 8,000 contracts here in this 5 minutes. This is a buying climax on the futures market, and look at the price action later on. So there is no professional buying here pressure, so that's the reason why they should selling. It's more like an intraday selling. I will try to secure my position if the price go like for example 25 to 30 pips. If price drop lower 25 to 30 pips, if we see total absorption of this, that will be very good and very nice. But I will look to secure after 20-25 pips drop if we see that. The targets, I placed the Fibonacci expansion from this ABC, and I saw the 161.8. There is also swing low, few swing lows here near the 0.7070. So that area is also about 75 pips, which is about 1 free risk reward ratio on my transaction. Since we have the interest rate decision the next 30 hours, for about 30 hours, I don't want to, I must or secure or exit position. I don't want to have position over the interest rate decision for Australia. Anyway, I'm expecting that price reach my at least area for the stop loss and break even, so I can let this transaction, or even better if the price go and you know and test my and hit my target. So again, what's the point here? It's to wait the liquidity on some instrument, read the volume activity, and try to follow the institutional and institutional money and smart holders. So you don't want to trade a market which is not liquid, the days which are not liquid. There is someone asked me on my thread on the Forex Factory what's how I measure the liquidity and so on. There is a lot of things you need to understand there about the liquidity, to recognize if that liquidity is good or not enough to place the order, or to watch even that instrument. That's a part of my mentorship program. There is a lot of things there. You must understand how the tick volume works, what are the largest liquidity providers about the Forex, how we use the futures market in correlation, how we use the stock market in correlation, and options and so on, everything together. Also the report, COT report, which is also taking the part in liquidity. So all of these markets, are together like pieces of the puzzle. So the real truth of the market lying on some of these correlations. Sometimes the correlation is between the stocks or indexes and the currency. Sometimes correlation is between the futures market or currency. Sometimes it's itself in the price action on the Forex on the chart. So, but you must know to understand this business, let's say business cycle or the market cycle, where everything is related. Every large market is related with other market, and they together create liquidity, and they together create demand and supply on different instruments. What you see on the currency, if we speak about the currency. So that intermarket correlation is very, very important into professional trading, and that's again, I have the big part of that. Like half of my mentorship program is covering the fundamental aspect and intermarket correlation. So yeah, this is about this video. So again, I have one position on the Australian dollar to try to catch one free ratio potential and use this buying climax into professional selling and try to benefit before the interest rate decision in about 30 hours. So we have a time. It's about 60-70 pips we need for potential target. And again, if the price don't go, it's not, even if the price go and hit stop loss, it's not big deal. We try this. It's worth to try with one transaction. Place above the climatic bar, since we saw the professional selling in this stage here. So if the price go above that, something is not good and better we are out, and we lose 0.5% from account. If the price go and continue lower like we expect, and then we secure or we take part of the take profit, depend on the market volatility and so on. Also, one thing, I have the fixed take profit near this area, but if I see that price action telling me that I need to exit earlier, something like I did on the USD CAD, if you remember last week, about I think 8-9 days ago, then I will close earlier, because you must adapt to the market in the certain conditions. This is not robotic. You cannot say I'm expecting this level and this, and that you are sure about that and wait until that is reached. That's very, very wrong in professional world. You must adapt to the market. You must adapt to liquidity. You must adapt the conditions. Every hour conditions can change, so you must follow your setup, manage your setup. Once you enter it, you must have the good reasons first of all for entering. Once you enter it, you must follow progress and manage setup properly, secure after the some certain points after the price dropped in your favor in this example, for example, so define the levels where you will put stop loss and break even, then observe that, have the fixed take profit, but observe the price action and volume, because that can also be alert for us to exit if we see that the buyers can come in. So we will not trade a fixed take profit in that case. So that's about that part. I mean, there people and traders, most of traders trying to be the right, don't try to actually profit and learn to profit, and to not just profit on the market and profiting with a low risk trading, which is most important thing. It's not about it if you can earn like hundreds on percent or stuff like that, but if you can lose all of that in the one setup, that's not leading you to anything good. You know, you can be a temporal in the good plus and so on, but that it's not consistent type of the trading, and it's just a question of time when you will be pretty much washed out by the smart money. So you need to trade with a low risk. It doesn't matter how the setups looks like. This is a speculative market, and this is a investing business. So this is a risk in the first place, and then the profit will come. You will collect the profits with scaling out and with proper positioning. But if you extend the risk, or you extend a lot of risk, that can be a big problem, because you will have very hard time to back that. For example, potential big loss if you extend the risk. So again, low risk. So for example, my goal for this year is to keep drawdown near the 5%. So 5, maximum 10%, but absolute maximum it's 10%. But I will try to keep the maximum drawdown near the 5%, and I will try to earn about 50% yearly income with a 3 to 5% maximum drawdown. That's pretty much the big thing if you can do that. So you're really professional if you can do that, and this is the goal for every large investor, money manager, or trader. So low risk and quality return, that's the beauty what you can do. So yeah, that's about that part. So I want just to make you these clear points clearly, so you can understand, because again, I got a lot of emails. You know, I see in a lot of websites that people are traders that don't know what they're doing. They're losing accounts over and over. They overextend the risk. They don't know right technique to trade, what to focus on. They don't have, most of them, they don't have even clue about the liquidity and what is the importance of liquidity in the volume. On any market, not just FX, pretty much on any market, the liquidity and reading the price section together with liquidity, it's actually the key for success. You can read any book about big successful traders, and on all books you will see that the absolutely main focus is liquidity and volume. So again, if you're interested to learn my method of my way of success, and also way of many professional traders who are using the liquidity in their main focus, if we speak about technical analysis, and also if you really want to learn about the fundamental and intermarket coloration, which is everything is related. Without this knowledge, you cannot be so successful on the market if you don't have knowledge about the intermarket coloration and about the fundamental analysis. So that's it for this video. I hope you like my analysis, and if you like my analysis, feel free to comment on the my YouTube channel, or also feel free to join my thread on the Forex Factory, the Art of Trading by Petar Serby. You can post your opinions there, comments, or whatever you like. And of course, if you want to start my mentorship program, you can add me on the Skype. I will put my Skype username in the description of the video, so you can add me, so we can arrange potential cooperation if you really like to start to think and to see the market with the professional way. That's it for this analysis. I hope this set will be finished good, but even though if this setup don't finish good for every reason, it's still good potential entry and good conditions to establish one position and see what will happen in this stage. So I hope it will work. So For now, I wish you good trading and trade safe. Bye bye.